Hello everyone. Today is August 27th, 2024. It's Tuesday and welcome to NVDA Radar Talks. NVIDIA stock price fell 2.25% on Monday, and its price fell below the 5-day moving average again. In the past 5 trading days, the stock fluctuated violently between $131 and $123. Although some semiconductor-related stocks and some technology stocks have fallen below the consolidation range, the stock has not yet fallen below it because the stock price has strong support at the level of $124.50, but this position is not unbreakable. Data shows that the daily short-selling ratio of the stock was around 7.5% from August 20th to 21st, while the daily short-selling ratio in the last 2 trading days was around 8.4%. The increase in the short-selling ratio does not mean that the stock price will definitely fall, but it reflects that the recent bearish sentiment of the stock has increased. Based on the analysis of the stock's trading volume data, $124.50 and $128.40 are both relatively concentrated positions of trading volume. After 5 to 6 trading days of sideways consolidation, it seems that a large amount of capital has withdrawn from the market at the level of $128.40, which is why the stock price has lost further upward momentum. But the reason why the stock price has not fallen sharply may be that long capital is still trying to block shorts, which can also be seen from the 15-minute chart of the stock, which is not shown here. Therefore, the next transaction is extremely critical. If the stock price falls below the $124.50 position, the stock price will seek the next support area. Let's take a look at the capital flow data of the stock. In the past 5 trading days, the stock has 4 days of net capital outflow, and the cumulative outflow amount is as high as $4 billion. This average daily outflow amount is still much higher than the data of the previous few trading days, which is consistent with the previous analysis. The large outflow of funds represents the increase in bearish sentiment for the stock, which also indicates that the consolidation period of the stock may be coming to an end. Let's take a look at the market position distribution data of the stock. If we expand the range a little bit, the stock's positions between $120 and $131 are relatively evenly distributed. Although some prices are the peak of positions, they cannot be used as a reference standard in some cases. So we can clearly see that the stock price is supported at the level of $124.50. But the current price is only 1.5% away from this position, so it is still very dangerous. Once it falls below $124.50, it will seek support between $120 and $124. At present, this possibility is very high because from the perspective of capital flow data, the strength of the bulls to fight back against the bears is not strong. The large outflow of capital means that the consolidation period of the stock may be coming to an end. Let's go back to the daily chart of the stock. As mentioned earlier, the stock price may struggle at the level of $124, but if the overall situation of the semiconductor sector is relatively negative, it is not impossible for the stock price to fall below this level. In addition, we also see that the bulls are trying to block the bears, but this effort may not prevent the stock price from falling further. From the perspective of capital flow data, the selling power of the bears is very strong, and it seems to be stronger than the bulls. But the stock position distribution data shows that even if the stock price adjusts downward, its downside is limited, so I think the target range of $120 to $124 is more reasonable, at least before the company releases its latest quarterly earnings report. Okay, guys, that's my price prediction for NVIDIA stock. Thank you for watching. If you like my analysis, please click the subscription button and give a thumbs up. I will bring you more latest price predictions for hot stocks later. See you in the next video.